Although it's funny, I saw a post this week about, if they don't lower interest rates, is that going to be bad in December in Canada? And I'm thinking, one thing that is often not talked about is that if you drop your rate and you're lowering the value of your dollar, that's great if you're an export nation. But if you're importing everything, it just means that everything gets more expensive. Mm-hmm. So I think you have to balance these things. And of course, in the United States, I think that that's part of a big balancing act as well.
Yeah.
You're going to cut all of these agencies and you want to make smaller government. However, and you're going to use tariffs and whatnot for protection. You want to get some industry back into your nation, manufacturing. Of course, you also have to export if you're going to manufacture things. So again, there's this balancing act between protection and also weakening of the dollar over time. And of course, how else do you pay off 35 plus trillion in debt with a strong dollar? You can't really.
No.
You can't expect productivity, GDP, to go through the absolute roof and quadruple it in order to pay off the debt. So I think there's a lot in our favor in that respect of a weaker dollar, which is obviously going to be good for gold. Speaking of being good for gold, we had a couple of forecasts this past week. One from Goldman Sachs, Jerry. This comes from Bloomberg. On November 17th, they wrote, gold will rally to a record next year, 2025, on central bank buying and U.S. interest rate cuts. According to Goldman Sachs Group, Inc., which listed the metal among top commodity trades for 2025 and said prices could extend gains during Trump's presidency. Go for gold. Analysts, including Dan Struven, said in a note, reiterating a target of, and I have to say only, 3,000 an ounce by December 2025. The structural driver of the forecast is higher demand from central banks, something we've discussed at length on this show, while a cyclical lift would come from flows to exchange-traded funds as the Federal Reserve cuts, they said. Finally, trade tensions could revive speculative positioning in gold. Rising concerns over U.S. fiscal sustainability may also aid prices, something we're literally just talking about, and that central banks who are holding a lot of U.S. Treasury reserves may opt actually to sell those for precious metals. So, Jerry, what do you think about Goldman Sachs coming out, calling gold one of its top commodity trades, as well as do you think $3,000 is perhaps a conservative estimate for a target next year?
I think it's just their approach is just to limit, and being conservative is just the way they are, that they have historically been conservative with their forecasting for precious metals. Their main concern has always been, I believe, in reducing volatility, and which is why when we have the risks of interest rate cuts, because we ultimately know that rate cuts mean that there's something wrong in the economy. We have to loosen monetary policy. This is why we're seeing stimulus. Japan just went to the market and just dropped some stimulus into the market because it needs it. It's artificial growth, so therefore we need artificial stimulation to the market. So when you have this type of risk that comes from interest rate cuts, you look to gold as a safe haven. You look to gold for liquidity. And this is why it's their mantra right now. Go for the gold. Goldman Sachs is saying it. UBS is also coming to the table.
We'll talk about UBS in the next segment. Of course, these are things that only come out through Bloomberg, through their articles. It's rarely something that you're going to see on the mainstream financial news networks, because it feels a lot, Jerry, like gold and silver are trading in the shadow of cryptocurrencies. But of course, gold is going to play a major role in technologies going into the future, something we're going to talk about in the next segment. For now, if you believe in what Goldman Sachs is saying, even from a conservative perspective, it may be time to look at holding physical gold and physical silver in your registered account and become your own central bank. The way to do it, you contact Guildhall Wealth. We'll show you how it works, which is effectively at the end of the day, you're going to have physical gold and silver that you own directly. You can go to the vault, personally audit your holdings. That's right. Hold it in your hand. And it's held in a vault facility outside the banking system, securing your wealth, the type of wealth that will last a generation. It is a true heavyweight in terms of what real money is. As you said, Jerry, liquidity and security. That's what people are looking for. Not just return of their capital, but return on it, gaining over the years. Over the last 20 years, silver's up close to 400%, gold's up over 600%. These are the type of gains you need to beat inflation. And even Ron Paul himself, which I want to talk about in the next segment as well, has talked about it's great that they're going to come out with the Department of Government Efficiency, but you should still be holding gold through this period of time. And you can do that in your RSP. Just give us a call, 1-877-8-SILVER, and the website, guildhallwealth.com. And we're not the only ones talking about that, right, Jerry?
No, absolutely not. Not just us. Don't take it just from us. A new report from Oxford Economics suggests silver in diversification. We often talk about gold, but a new research report from the Oxford Economic highlights silver's strategic role in diversification, that institutional investors should allocate to silver to their portfolios for optimal diversification and risk reduction. The study conducted highlights silver's low correlation with other asset classes and its potential for strong returns, especially given its growing industrial applications in green technologies. Of course, like the Silver Institute, they failed to mention no data on the military's demand for silver. That is the major driver for silver demand around the world. And we have to do what they're doing. We have to allocate into physical silver as well, doing what the Russian central bank is doing. They're not just acquiring stockpiles for industrial usages and applications, which is wise. You want to have that stockpile correct. But we also want to have monetary reserves. And central banks around the world need monetary reserves for two reasons. They need liquidity. And the second reason is independence from all of the bananas that we're seeing in the market. And in the market is bananas today. It doesn't make any sense. And when that happens, the uncertainties, it's all about lowering your correlations, lowering the volatility with gold and silver.
The number, 1-877-8-SILVER, the website, guildhallwealth.com. Great place to check out the type of products that we offer at Guildhall, which, by the way, are all LBMA approved. That means that this type of product is liquid all around the world. Sometimes people will buy non-LBMA approved product, which there's not necessarily anything wrong with that, and you could save some money doing it. However, something that a lot of people underestimate when it comes to acquiring physical metal is the liquidation process, selling it down the road. You want to make sure that that's as easy as possible. And one way that you could do that is to hold the physical product, your own holdings, in a vault. At Guildhall, we utilize Brink's fully allocated, segregated accounts. It allows you for ease of liquidity. So for clients who may have decided to move to Mexico, or they're on vacation, or they're somewhere around the world, or they're just very busy, or maybe they live an hour and a half away from Guildhall. When the time comes to sell, you want to be able to sell quickly. You want to be able to liquidate your holdings, get the price right away, and get your funds right away.
That's right.
And having an account, and it doesn't have to be everything, but having some of your holdings in a depository account could be a lifesaver and could also gain you a lot of profit down the road. The number for that is 1-877-8-SILVER, and the website, guildhallwealth.com. Jerry, what do you think about that?
My thoughts, Jeremy, and the argument for holding metals right now, physical precious metals, outside a digital banking system is key right now. As we're in the midst of a Canada Post strike, some individuals used to be able to send back the metal. We would send you a label, put the label on the parcel and ship it in if you wanted to have products sold back to Guildhall. Well, now you have to bring that in, and you have to make your own arrangements with another courier or FedEx Purolator. But having gold and silver in a depository with Guildhall Wealth ensures speed of liquidity or even access to the liquidity that you need without having to sell your precious metals. You do not want to have to sell and forfeit the opportunity, the topside potential that we have in precious metals. You don't have to. Guildhall unlocks that liquidity for you, and the depository is the new bank in banking without a bank going forward.
And I think sometimes, especially, and I can't blame anybody, I'm in the business, so I can rationalize it, of course. But I think sometimes, especially during these times, people are watching their pocketbooks and they look at the cost of storage and they say, it's just an extra expense that I don't want to have to deal with. What do you say to someone who's looking and they might make the decision to say, no, I'm going to self-store this portion of my metals because I just don't want to spend anything extra on actually storing and insuring it?
I'm okay with that. A portion of the portfolio should be in your possession for those scenarios, the Mad Max scenarios, worst case scenarios. If you do need some silver maples, they are legal tender. They're accepted around the world. We saw the video from George Gammon, on Rebel Capitalist. He was able to take silver maples, the very popular silver Canadian Royal Canadian Mint silver coins, into Argentina, and they were accepted over the gold, over US dollars, over Bitcoin. So this is something that you would want to have in your possession, but the rest should be held in the vault to be protected against theft, fully insured outside of the banking system, and then you still have access to it. So having a little bit of both is a wise play, and we can help tailor that portfolio, that hard asset portfolio, some gold and some silver.
I think sometimes as well, I think that being transparent can sometimes be a punishment. ETFs don't tell you what they charge. Mutual funds don't tell you what they charge, but you're paying it, right? Yeah. Would you rather it be taken away from you without your knowledge? Look at inflation. The government has had you believe for the past 30 years that 2%, at least 20, 25 years plus, that 2% inflation should be acceptable, that you should accept 2% loss of your purchasing power every year. And they've got you thinking that that was okay when it should be stable prices, right? I had a client recently, he just sold some product. And it was funny because I think one of his issues was the cost of doing business. And
the storage, which is just the storage.
I emailed him and I said, in 2 years, after all costs of doing business, you've got, the market's gone up 34%, something near that. He averaged 17% annualized return with a storage cost of 2.5% over those 2 years. So I think the ends justifies the means, definitely. If it was a market that was going nowhere, again, I've said this ad nauseum, but if you're at 600% over 20 years, it's
negligible.
It's negligible.
That's right.
So let's get back to where the price is going. Goldman Sachs isn't the only one talking about gold rising over the next year. We also have UBS has come out into the mix talking about the rise in gold. This comes from Bloomberg. UBS joins Goldman in forecasting gold's rally and saying that it isn't over. UBS also flagged more buying from monetary authorities. The official sector which tends to buy physical gold bars. Isn't that interesting? The official sector tends to buy physical. In other words, central banks don't buy the ETF.
No.
They buy the actual product and take delivery. It's likely to continue adding to reserves for diversification purposes and amid geopolitical tensions and sanction risks. It said many central banks' gold reserves remain small as a percentage of total assets. I like that. For the fact is we talk about that at length on this show, and it's just interesting to put it into the perspective that gold reserves remain a small percentage of total assets for most of these large institutions, and that it is set to continue to grow. And I think for those really paying attention, Jerry, the type of people that we have great conversations with every day, they notice that the world monetarily is changing, that we are moving back to, as Vince Lancy says, a mercantile world where it's no longer credit. It's no longer pay me later. It's can you afford to pay me now?
Right.
Right? How are you going to do it? And that's where gold and silver become a major play in terms of creating trust. And I think as well, when we've been living through a period of interest rates and dollars being manipulated for cheaper exports and constant rise and fall, and you want fair game, right? Part of these tariffs is, hey, listen, we are not in fair competition. You're dropping your dollar.
It's economic warfare.
It's like basically being a man and going into women's sports. It's not fair. Mm-hmm. You're not playing by the rules, right?
Right.
And changing them doesn't make it okay.
Continually redefined.
Yeah, redefining things doesn't necessarily work, revisionist history and things. So, look, this is about creating fairness, and there is nothing more fair than having a measuring tool called gold to measure your economic activity and to measure the value of your dollar long term.
Mm-hmm. That's right. I couldn't agree more. I think it goes in line with how the Bank of International Settlements reclassified gold to become Tier 1 capital and stripped unallocated gold from any value. And that these institutions need to shore up gold on their balance sheets for such a time as this. When there is a restructuring and a rebalancing of assets on balance sheets, you need Tier 1 capital. And that Tier 1 capital is gold, and all roads lead to gold. And as UBS and Goldman Sachs highlight the importance of gold, we should as well. We should as well in our scaled environments here. And however you want to diversify your portfolio, whether it's 10% of your wealth, or if it's a lot higher, you want to pick up the phone and give us a call, 1-877-8-SILVER, and the website guildhallwealth.com or guildhallpreciousmetals.com to pick up a tube of silver maples. Christmas is coming around the corner really quickly. You want to get the 5-gram gold bars or even the 1/10 ounce coins. Those are very, very popular, just flying off the shelves. And even the 5-gram gold chains, very popular for gifting. Guildhall Precious Metals, and set up your alerts.
Now, we said we'd talk about Ron Paul, and this goes to what we were just talking about here of why gold is still going to be very important moving forward. Yes, it's a small component of most central banks' portfolios at this time. It's probably, if you look at Rick Rule, and he talks about the fact that most of the public, investing public, is not even involved in gold. And you look at the mainstream news, they've got you all hopped up on Bitcoin. It's reminding me of when they were into Beyond Meat.
That's right.
Do you remember those days?
Yes.
They wouldn't stop talking about it. All right.
Never touched it.
Yeah, they're like us. We never stop talking about gold. So this comes from Kevin Fernandez 82 on Instagram. He put out this post because Elon Musk on X said, would be great to have Ron Paul as part of the Department of Government Efficiency. The great Ron Paul, he obviously Austrian economist, believes in sound money. And he wrote back, I'd be happy to talk to you about it. And then he wrote through his Birch Gold Group post. He said, my new partnership with Musk. Elon Musk wants to clean up Washington's wasteful spending before it destroys our economy. As part of his plan, Elon was asked if I should help to create the proposed Department of Government Efficiency. I was glad to see he liked the idea. However, I think there's even more urgent threat to your savings. Yes, government waste is stealing your tax dollars, but inflation is stealing something far more precious, your life savings. Government inefficiency may cost taxpayer billions, but inflation has already stolen 18% of your purchasing power since 2021. This is Ron
stuff.
Paul.
Mm-hmm.
Yeah, remember they used to cut him off when he was debating for the presidency.
That got me
they
so
used
angry.
to just go to commercial. That this is good stuff, he would always say. That's more money taken out of your pocket than any wasteful government program. The good news is, while we work to fix Washington, you can protect your savings today. And he goes on to say, use gold to protect your wealth. And of course, he's talking about your IRA accounts through Birch Gold. Now, of course, in Canada, I think everyone is acutely aware when the Prime Minister decides, he says, I want to give you $250. That's it, $250. Well, what about everything you've been stealing from all the taxation and inflation? Mm-hmm. You want to give back a measly $250. I mean, it's almost comical at this point of just how deranged and what lunacy it is at this point. And you hope it really is just a matter of time. And when you look at who they're putting in for ambassador to Canada, I think he's in a lot of trouble in that respect. So, look, I don't even want to talk about it. I don't want to look at the guy. I don't want to talk about it.
Probably came from the green slush fund, the 250. Where did that come from? Obviously from our kids and our future generations.
So
definitely desperate times for him.
So Ron Paul, do we give him a yay or nay on that?
Give him a yay, of course.
Okay. So you think that even though they're going to be slashing and creating more efficiencies and putting new great policies in place, that ultimately this is still a time you would agree with Ron Paul to be protecting your wealth from inflation?
Yes, it still has to be that way to protect against inflation until the the upward revisions and the revaluation of the gold and silver. We are going to be seeing a lot of policies coming into play, and I think one of the first policies that I'm excited about is what Politico wrote about recently, was how Trump aims to revive that Keystone pipeline that really impacted Canada as well. That pipeline was going to go right into Alberta and surrounding areas and creating a lot of jobs and dependence and independence from importing oil. And I think if we do that, it will be deflationary in regards to a lot of costs that we are incurring here in Canada. So it's a huge thing. And, I'm very excited about that first and foremost. We have a lot of clients in Alberta as well that were laid off. But we need to kickstart this and get digging, which requires a lot of manpower and a lot of resources.
Canadian reconstitution is what we're going to be needing over the next several years once this government is out. And what it could lead to is incredible wealth for the country. And one of the things that even if you decide to never own gold, you might benefit from that no matter what. We're going to talk about that in the next segment. The number 1-877-8-SILVER, the website guildhallwealth.com. If you want to hold physical gold and silver in your registered account, give us a call. We'll show you how to do it. Holding physical gold and silver is a very safe and simple process. All you have to do is give us a call. We'll show you how to do it. And again, it couldn't be safer because there's no counterparty risk. Any other type of vehicle where you're holding gold and silver in a registered account, believe me, has counterparty risk, whether it's a pool account, an ETF, a gold-backed fund. All of these things mean you don't own your gold and silver. Whereas with Guildhall, you own it directly. That means you are getting rid of the counterparty risk. And some people, Jerry, lose their minds with this, by the way, because they want to see the fine print. There's no fine print. You don't need fine print when you own it directly.
Correct.
Something to think about. So we said we'd talk about precious metals in industry. And Jerry, you brought an article talking about gold in the tech industry. Do you want to tell us a little bit more about that?
Yeah, absolutely. I think what it comes down to, Jeremy, I think for me, I heard one of these quote-unquote Trump allies mentioning this week that they recommend selling off the past for the future, which means selling off your gold reserves and moving away from gold and embracing Bitcoin for the reserve.
You mean like something like being unburdened by the past?
That's right. Well, a little bit of studying of history, you would realize that central banks require gold for liquidity. And I think there was, and just to bring that up really quickly, there was actually a Bitcoin warning this week that came out that really talked about, it came from Justin Bonds this week that talked about the Bitcoin's vulnerability to a bank run, how it could potentially take, about 1.82 months long if everyone wanted to liquidate at the same time. If a panic sets in, he says, the vast majority of 33 million on-chain users will not be able to exit in the Bitcoin market. The queue would be, in fact, 1.82 months long, potentially even triggering a death spiral, annihilating investors. Bitcoin's code and math do not lie. All of these numbers can be independently verified by looking at the Bitcoin source on your own full node. The math, he says, the figure for on-chain Bitcoin holders was taken from Glassnode's analysis on March 2023. The TPS calculation is based on max theoretical block size divided by transaction size, and it looks like it will take about 2 months for all users to exit the network in a mass exodus scenario, like a massive party where you just can't get out, Jeremy. And when we think about the reasons why a central bank, the Federal Reserve, And for a senator to mention, let's embrace this potential Bitcoin to replace gold reserves, which is the most liquid asset class in the world, the largest asset class with Bitcoin. The governments are not going to. They need a little bit quicker exit strategy than 1.82
Jerry,
months.
It's not just that. It's not about necessarily the liquidity. It's that it's a tier 1 asset, so you don't have to liquidate it. You can just send it.
That's right.
You can say, "Listen, I've got this much gold. It counts, so you can borrow against it, or I can send it to you, or you can sell it. Whatever you want to do." Right? That's how it works. That's the whole point of being a tier 1 asset, and liquidity is a big part of that. I think what that gentleman was saying effectively is just the fact that because it takes so long to process these things, that if you had a lot of users wanting to process all at once, it becomes very difficult.
Yeah, and then the rates start to go up, the fees to get out starts to increase,
right.
And all of
you
these
know
things.
That's going to happen.
But when we look about, potentially, I don't want to say abandon, but shifting away from the gold industry, we really look at the industry as a whole. And this paper came out from the Minerals Council of Australia. And Australia, in terms of its gold, ranks second in the world behind China's gold production, Canada being fourth in the world. Imagine that.
Well, let's just talk about that. So if gold mining were to be really set loose, same thing with oil, you think about Canada and you think that we're just, we're paying these carbon taxes that no one else in the world pays. We're just being punished as Canadians. And also the CRA is going after everybody for everything, It's just punishment what's happening right now. But imagine if they unleashed it.
Unleash it.
You said we're the 4th largest gold mining country.
This is coming from
gold.org. Do you know how
gold.org.
rich we are? Do you know how rich of a nation that would make you if they were to actually unleash that, lower regulation, let it all happen, both oil and gold? I mean, that is massive. Forget about selling lumber. Mm-hmm. Try about where gold goes. Imagine if gold goes to $10,000 an ounce and we're the 4th, 5th largest mining producing country in the world. What kind of wealth that means. I look at Saudi Arabia. They don't even pay taxes there. They are super rich because of their oil, and where are we? 3rd?
Yeah.
Come on,
we're actually
guys.
Fourth. But in the context internationally, global mine production was estimated at 3,100 tons in 2022. And in 2023, Canada produced 200 metric tons of gold, which was 4th in the world. The year prior, we produced 6.6% of the world's gold, ranking 4th in the world. And Canada produced 223 tons of gold in 2021, with 70% coming from Ontario and Quebec, our own province, Jeremy. So there is no need for us to be worried about taxes and how am I going to afford things when you can unleash wealth onto each and every citizen freely. And not to mention oil. Canada is the 4th largest producer of crude oil in the world. There is no need for this. There is no need for wondering where the wealth will come in from when we can tap into it. When we start digging and the pipes start flowing, the future looks very bright in Canada.
So, Jerry, we wanted to very quickly talk about gold as part of the tech industry.
Yeah. Gold, I mean, coming from the same paper from the Mineral Council of Australia, such a great paper that highlights the growing trends in gold, and they call it the golden rise of industrial gold, where we talk about circuit boards, everyday electronics, why they use gold in electronics. It's highly conductive, malleable, and ductile, and it's chemically inert. You have gold in solar, wind, hydrogen electric. And did you know the industrial catalyst, gold nanoparticles, are an effective catalyst in modern manufacturing? Catalysts reduce the amount of energy needed to turn raw materials into useful products. And this is just, again, as we advance technologically, the more and more gold and silver especially is needed in every single application and industry that requires these things.
And I think that if we are entering into, quote unquote, a golden era where you're lowering regulations, you're creating efficiency, you want to unleash the power of the entrepreneur in the US, and ultimately I believe that will also spread to Canada, then that means that entrepreneurs are going to be coming up with brand new technologies that are going to just continue to proliferate. And I think that's where this really starts to get the juices flowing in terms of what could happen here. and what the possibilities are. And you already know that we're on the cusp with regard to all of these usages. I've got this article here we'll talk about in the next segment, which just solidifies what you were saying about technology, this one specifically about AI. If you want to hold physical gold and silver and be a part of those gains that have such strong potential, and we're still at such a nascent part of this bull run, you can call us at 1-877-8-SILVER and the website guildhallwealth.com to purchase physical gold and silver directly, to hold it in a vault facility outside the banking system, no counterparty risk, and you can do the same thing in your registered account. I don't think there's time to delay. I think you should definitely go to our website, give us a call, get physical gold and silver in your registered account today. Even on this show, Jerry, you have conservative banking conglomerates like UBS and Goldman Sachs saying with strong belief that gold will continue to rise from 2024 well into 2025. We've given lots of reasons about inflation and lower dollars. How are you going to get rid of the debt? And we've also been talking about the demand for gold and silver in technology. In technology, silver, we've discussed at length on the show, specifically military, that the Silver Institute does not even want to touch or acknowledge. But the fact is we need it for those things. And what kind of pressure does that put on the supply side of the market? You talked about gold in the previous segment, Jerry, in new technologies and some of the ways it's being used. Mike Mahari this week came out with an article titled, "Could the rapid growth of AI boost gold demand?" Well, according to the World Gold Council, the answer is yes. As you said, Jerry, and it says here in the article, gold's excellent conductivity and its malleability make it an important component in the manufacture of electronic devices. He goes on to say, according to the World Gold Council analysts, gold's superior performance limits the extent of substitution, and the advent of AI may begin driving demand higher. AI requires a significant electronics infrastructure, and gold is an essential component in the manufacturing of AI-enabled devices. Gold's conductivity makes it ideal for transmitting data at extremely high speeds with minimal energy loss, a crucial requirement for AI systems. In other words, if you want to speed up the Bitcoin infrastructure, you're probably going to be using gold to make those transactions faster.
Computing, yep, that's correct.
Gold's resistance to corrosion also extends the life of electronic components. Again, you want to send all those bits back and forth, and you want to be in a crypto world, which is great. That depends on electronic components, and gold, which is resistant to corrosion, is going to be a huge part of that. This is critical for continuous and intensive AI operations. This is a great article, Jerry. He goes on to say the World Gold Council projects that the demand for more sophisticated hardware will rapidly increase with the advancement of AI, which I said in the previous segment as well. What do you make of all that?
We see it, Jeremy. You know, we're seeing the advancement of technology. We're seeing gold being used in aerospace. We're seeing it in the McLaren F1 race cars. I saw it firsthand on the heat shield. It's expanding, and it is now become a strategic thing to accumulate in. As we're seeing strategies of MicroStrategy, with their strategy of, getting Bitcoin on the company's balance sheets by selling their shares and buying Bitcoin to prop up the Bitcoin and propping up your shares at the same time. History can repeat. If you look what they did in 2020 or 2000, MicroStrategy pumped and they dumped. I'm not suggesting this is exactly the same thing, but is it a wise strategy? When we're seeing the world right now, and most of corporations, U.S. executives have never been more aggressive in selling stock so rapidly. They're on the sidelines. The strategy that the countries are employing is one of recognizing that control over the precious metals industry translates to energy security. That is a strategy that they're employing, and we should do the same. If we look at silver, on China's silver acquisition, for example, China's silver imports surged to 9,000 metric tons per year, catching up quickly to India. China revealed their 7-step silver plan most recently. You had Xi Jinping sitting on a stage pointing to silver on a stage, Jeremy, showing...
Oh, that's when he was in Peru.
This is it. Silver for solar, silver for electric vehicles he's pointing to, silver for...
That's not a meme.
silver for AI, silver for robotics, and batteries. This is where it's going. And just recently, as the COMEX last month, October 25th, increased their margin requirements for silver futures contracts by 4 measly %, which ultimately makes it more expensive to transact on the COMEX, to reduce the activity on the COMEX. In contrast, just this week, the Shanghai Gold Exchange, which is a physical exchange as opposed to the COMEX, which is 99% paper, this physical exchange recently encourages more traders now to buy physical silver with huge minimum threshold cuts. They just slashed it by 40%, which is indicating a tightening of physical silver supplies. These new rules kick in, everyone, November the 20th. It just kicked in on the Shanghai Gold Exchange.
So they're doing micro strategies. They're encouraging people to buy the physical. They want more and more physical being purchased, which in any market obviously drives prices. The only thing is we got to get rid of the paper on the COMEX, and that means taking delivery, and that's going to happen. Eventually the rubber hits the road and the market's going to go through the roof, and those who are shorting the market are going to be in for a rude awakening. Jerry, thank you so much. We didn't even get to the banana. We didn't even talk about the banana. I'm sorry.
$6.4 million.
We'll have to talk about it next week in the meta world that we live in. Then, if you've missed a show, please follow us on X. Please like and subscribe on our YouTube channel, on our Rumble channel. And great to get all the feedback on those channels. But yeah, please like and subscribe and check out the channel if you haven't yet. Thank you so much for joining us here on The Real Money Show. Jerry, thank you. We've covered a lot of ground this week. If you want to get involved in the gold and silver market, just give us a call. The number's 1-877-8-SILVER. The website, guildhallwealth.com. And the future gains can be yours if you just contact Guildhall and hold physical gold and silver in your registered portfolios. Thank you so much. This has been The Real Money Show on 640 Toronto.